Hi everyone, I'm Akshay, and I think you can see this is Nifty 50 chart for past 2 or 2.5 years, right? So it's a Nifty 50 chart with basic 50 DMA and 200 DMA. So the purpose of 50 DMA and 200 DMA is to check the overall bearish trend or bullish trends of the Nifty as an overall indices, because if the Nifty going to fall, then be it mid cap, small caps, and sec or any other indices that will also fall, and vice versa. So let's start from something which is just before the COVID level, right? Just to have an idea of how this 50 DMA and 200 DMA works. So if you could see this red line, which is this one, this is now a dotted line, is a 50 DMA line. Why? Because it moves faster than 200 DMA velocity. However, if you go to this blue line, it's a 200 DMA line. So I think you all must be aware about how to bring this 50 DMA and 200 DMA in your chart. So I'm not discussing that right now. So what I'm discussing here is uh, how to use this 50 DMA and 200 DMA on your charts. So if you could see that this 50 DMA is staying above this 200 DMA line, along with Nifty 50, which is staying above 50 DMA line. So here it means the trend is bullish. So where the Nifty is above 50 DMA and 50 DMA is also above 200 DMA, then we can say that the trend is bullish there. But if there is a crossover where their 50 DMA crosses 200 DMA line and goes below, which is this point, right? So here it means the trend is negative, which is a confirmation point. But before this, you could see that the Nifty has already fallen from this level to this level, and it doesn't make sense to identify it at this point of time when we have already made this much of loss. So what can we do? We can just ensure that this Nifty price, if it's going below 50 DMA, right, but it's staying above 200 DMA, then the trend is going to reverse. It means the bullish trend which was there already in the market is going to be reversed here, right? Which we all know what happened at the time of COVID. Now coming to the current scenario, so I'll just zoom in this chart. Now, uh, so we all can see here this here from the past 1 year the market has been rising sharply and they have made all-time high, right? Which we can see somewhere around this 18,600 or something, right? But since then, market has started making lower low and higher lows, or low high, sorry, right? Why? Because it's making a new low here, and then it has bounced back, but it has not, crossed the prior level, and then it has again make a new low, which is this one, right? But again, it's bounced back, but it's again a point which is lower than this one, which is this one. Then it's called a lower high, right? And a new low. But this new low is somewhat, at this level, which is equivalent to the prior low level. Now, what is happening if you look into the charts of 50 DMA and 200 DMA here, the market is going down, right? And the market is in bearish trend. The reason being because till now, where the trend was positive, the market has gone down, right? And the Nifty was trading below 50 DMA line nicely, but afterwards there was a sharp move up towards the upside, and then it fell again, right? And then it convincingly started trading below 50 DMA line, right? And now what is happening? 50 DMA has crossed 200 DMA line on a negative side. So what does it mean when a 50 DMA is above 200 DMA and it now goes below 200 DMA? Then there is a confirmation bias that um, that Nifty is in the bearish trend, right? And Nifty is also trading at this point of level, which is we can say a support level of the previous low, which was made somewhere in the March month. And also, I would say it's a consolidation level of June or July 21, because Nifty was there for around 1 or 2 odd months in the last year, right? So I would say it's a strong level, and it's sort of a make or break level. Reason being because from this level, which was 18,600, Nifty has come down to 15,700, losing 3,200 points or somewhat. But if we see here from this level, which was 12,000, from this level, market has gone to 18,600 level, which was where the market has gained more than 6,600 points in a year or so. Now, from there, if market has gone down by 3,200 points, then has come down by 50% of what it was gained from their prior higher levels of 3 years back, right? So it's sort of a mean reversion thing where a market had gone up at that point of time. Now market is consolidating. Now, if you also noted that Nasdaq on Friday moved up 3.5%, right? So there is a high probability that market will not go down from the current levels, but market could go up. But if you also see that Nasdaq was trading much above uh, against their current level, and they were down around 30 to 40% from their high. But on the contrary, Nifty has just down about 20 odd percent, right? Which is less as compared to the Nasdaq fall. So chances of Nifty going down is higher, even though Nasdaq has outperformed on Friday, right? So we need to see and critically analyze if Nifty is able to hold these levels or not. And if Nifty is able to achieve or go above these levels, then there will be a high probability then the bullish trend will come up. But right now, there is less chances of a positive trend. But yes, we can still see a Monday going up market. But in the second stage of it, we can again see market going down and making this sort of chart. So if you see this line, uh, if you make this low, so I see that market can come down to 15,200 as well on a lower side, but not on Monday because Monday should go up at least, but it can come down in the second half as well, but not that much, right? So let's wait for a couple more days and see how market goes. And if they pull up from this level, then you need to see how they are able to, strongly holding those levels or not, right? So accordingly we can make our decision in the market. So I think that's it from my side on the 200 DMA and 50 DMA. Can touch base again on other topics. So thank you everyone. Bye bye.